G'day folks, it's Jim here from FX Charts, Monday the 29th of April. Well, we had some fairly mixed data on Friday from the US, basically strong US GDP growth coupled with low inflation. That has kept the markets fairly mixed really. The dollar didn't know what to do with the numbers and ended up chopping sideways really for the most part. Stocks were a little bit higher. The big mover again was in the oil market, where profit taking saw a 3.5% dip. But as far as the US dollar is concerned, we did see a new multi-year low on the euro. That was only very brief after the GDP number came out strongly. But at the end of the day, we've ended up fairly mixed against most pairs. And if we go and have a look at the charts here, this is the euro. As I say, it did make briefly a brand new low or a new high for the dollar. And technically, I think 111.10 now is that low. And it seems to me that we could potentially, we're in this downward sloping wedge, potentially looking to test 110.5, I think, over the next few days. Although for the time being, of course, we've got not an awful lot of data out. We've got the Chinese PMIs out tomorrow. That may cause some movement. But really, we've got the FOMC on Wednesday, the Bank of England on Thursday, but the non-farm payrolls on Friday. Fed expected to do not a lot, as applies to the Bank of England. So all the interest is going to be in the press conferences from Powell and Carney. Ahead of the non-farm payrolls on Friday, where an expectation of 180,000 jobs created with a headline rate of 3.8% and average hourly earnings being at 34.5. So my view is that at some stage we are going to come down and test this 110.5, but I wouldn't be looking for too much more in it at the moment below there. That should provide decent support. And on the top side, well, 112 is going to be problematic, but above there we've got the 55-day moving average at about 112.65, and then the 100-day moving average at around 113. So here's that 100-day moving average. So that's a bit higher than that actually, 113.30. So I don't think we're going up there. I think at the moment we're probably stuck between 112 and possibly this 110.50, but I think more likely 111 until Wednesday. If we have a look at it in terms of the dollar index, here we are with the dollar index, and as you can see, it reached a high last week of 98.33. This is a weekly chart. This 98.70 would be the immediate target, while on the downside support seems to lie here some way off at the moment, around 96.5 or so. So at the moment, interim support would come in at these previous highs. That's 97.70. So as long as we stay above 97.70, I think we are probably going to test the top side. A break below that, which is there's a triple top here. A break below 97.70 would allow for an acceleration of the downside. The weeklies are fairly negative, possibly starting to head a little bit higher. Just a quick look at the daily chart. As you can see, sort of 98.85 or so would be a target. If we were to break above there, then this high up here, I guess, comes into play around 99.85. But the dailies do look positive, so at the moment, looking to buy dips in the dollar. If I move along to other markets that have been interesting recently, oil has had this strong uptrend, but it did top out on Friday with a 3.5% fall as traders took profit. Now we're sitting right on this support line here to sort of 62.80, 85 or so. Now if this gives way, I guess the 200-day moving average and the first FIBO support comes into play. That will be seen at so just under 61, and if we were to break through there, well, we're back at the sort of 50% pivot of this trend here. That's at that's back under 60, and then we move down to 38.2% of the recent uptrend, which is at 57.40, but that's a long way off at the moment. Right now, the dailies do look heavy, so I do prefer to sell rallies. Looking at sort of selling a rally sort of 63.50, 64, but with a stop loss above there, because if we do go back above there, we're probably going to test the highs again. So that's it for oil. In the stock markets, well, as I say, stocks kind of liked that data on Friday, and also helped by Ford moving, Ford's profits increase, and sent Ford up 10%. Now, the dailies they're looking a little bit as though we've got some bearish divergence. And so I don't think we're going to see any major move to the top side, but I do think the trend probably remains higher. If we can take out this all-time high, then it's blue sky territory, and above 29.40, I guess 29.50 will be on the cards, and then I guess slowly we head towards 3,000. If we do top out here, just turning to the 4-hour charts, we're going to see minor support at around this sort of 29.20 area, 29.15, and then at sort of below 29 at sort of 28.80, 90. But the first I guess this high here will provide something as well. The first real FIBO support's not really way down here. I mean, that's a long way off, and I don't think we're going there. So I'm looking to buy dips down towards a return to 2,900, but probably with a stop loss under this pivot level here, sort of 29.65. So that's about it for the moment. I won't go into too much depth. As we go through the week, I'll cover a few of the more of the currencies, but at the moment they look pretty much sideways, choppy, but probably going nowhere until the FOMC meeting. So we'll have another update tomorrow. Cheers.